Good morning, guys. 9:30 on the dot. Welcome to the Quick Trade Trading Room. For all the guys that struggle to find the sessions that we do stream, remember YouTube. You just click on the search bar at the top for Quick Trade. Click and check our channel. Click on videos, and you'll find all the streamed sessions there for you to do your revision. All right. Good morning. Just thought I'd mention that. And, so if you have any other questions, I'm more than willing to assist. You can ask me offline as well, or online, it doesn't matter. Don't forget our reminders here, guys. As always, Quick Trade is a licensed financial service provider and a licensed over-the-counter provider. Don't forget that the trading support department facilitates the trading room, guys. All right, this is a practical platform, and here we assist the clients with techniques, chat about various things. If you're joining me for the first time today, I'd like to welcome you and make sure that you know that you are welcome firstly, and then obviously for you to enjoy the sessions moving forward. All right. Don't forget the cutoff for withdrawals there, guys. Mondays to Fridays there at 1500 hours. And on Saturdays, don't forget that is 9 a.m. You do that via your client portal. Are we together? And if you need additional help, the live chat facility is available for you to consultants and agents that we have readily available to serve you and make sure that you are all right. We still have guys coming on as we normally do. So I'm allowing them and just going through these reminders, your accumulation phase, your breakout phase. Cheryl, how's the consistency? Every session we continue to mention, all right, these reminders, because this builds an idea. It builds, the competency level that many guys struggle with out there. All right, the competency. All right, so once again, morning, Angel, excellent, Vanella Benson, Boy Tumelo, Shemaine, Jess, Cheryl, Chuck, Gabrielle, Gabriella, Galaxy, Escher, there's any. Andile, good morning. All right, Jacob, BJ, John, Ken, Louis, Uno, Magdalene, Mike, Oliseni, Jabulo, Nyashe, Philip, Sephora, Mr. W, and Pietro. There's still a few more guys joining. We're going to start, guys, in 2 minutes. Let me just make sure everyone else is online. All right. Breakout phase, phase, accumulation phase. Whether you're going up or down, these are the phases that is created. Guys, what I will be trying to sneak in today here is ranges. All right. I'll be chatting about ranges and the difference in ranges as it relates to trading style, because every trader has a different approach. Remember, schedules differ. So if you are highlighting a range, it's going to be different to the next guy. Gert will not have the same as Philip. Philip not as Chuck. Chuck not as Cheryl. Cheryl not as Mike. So it's going to be different. Ken won't have the same as Chuck. So we have to distinguish those and understand why it is different. Okay. All right. So I think we're okay. I think let's proceed. If there's anyone else that joins us, let them come online and we'll sort them out. All right. Are you guys ready? I am. I'll give everybody about 14 seconds just to let me know if you're ready, and then we're going to get this thing rolling. All right. Don't forget, tomorrow we have the NFP. We have the NFP tomorrow, guys, the 7th of October. We had the ADP yesterday. Had some good figures there. That's obviously giving the dollar some strength. We're going to go and check it out now. All right, and then all the guys streaming on YouTube that will see the session later on, a very warm welcome to you as well. All right, so here we are, guys. We are on our economic calendar. You guys know I always show these calendars just so that you know what is happening. Obviously, you should know how to do this as well. We do offer training and classes that helps you and supports you to understand and have the knowledge. But we are looking at yesterday's calendar. We're looking at what came out yesterday for the US. You can see it was a pretty good economic release yesterday on the pound and the dollar. Together we saw the NZD interest rate remain the same. We saw the Aussie dollar there come down by 25 basis points. The ADP, the private sector, there was a word put in an article I read this morning that the United States is seemingly resilient at this moment in time and expects a robust workforce to continue. And so that's important for us because we're looking at the dollar index and we're looking for strength in the dollar index to go to between 117 and 119 points. All right. And so that's good information for us because we are pro-dollar at this point in time. Crude oil inventories there. There's nothing strange about that release every Wednesday. That's what we see. Are we together? You guys are aware that there was a cut, an announcement made of 2 million barrels there in cut of supply. And so that, is creating obviously a higher demand. As I always say to you guys, when there is a cut in supply, demand goes up. When there is an excess of supply, price then comes down like anything else. All right. It's the same concept. We're just applying it to Brent now. Okay. Then obviously today, yes, Thursday, China, national holiday there. And what's very interesting about this, guys, I'm not sure if you guys are aware, but when the Chinese, when they have holidays, there seems to be a lot less volatility at times in the market. If you guys see that, apart from the dollar, let's take the dollar out of the equation because the Chinese are major contributors to the global economy. All right. When they are not trading, you can see differences. All right, everybody. So if you take the dollar out, all right, we have the euro there. ECB publishes an account of monetary policy. This is nothing new. We are in the season of interest rate and inflation. That's what I call it. We've just had so many rate hikes. I saw the dollar. I don't know if you guys have seen it. Maybe I read it wrong, but I saw there might be an additional 125 basis points still at the end of the year. If you guys saw that to be increased 125 basis points, and that's at the end of the year. And then next year's hopefully coming down a little bit because what goes up must eventually come down again. All right, everybody. So it's very important. It's like a fruit salad, a little bit of everything. Yeah. All right, Chuck. And then we have the PMI construction there for the CAD coming out. So these guys are obviously going to be watched, ladies and gentlemen. But what's more important about this week, tomorrow, we have the NFP. All right. Now, if you look at the dollar here, all right, I want us to now go to the dollar and we can see that we were gunning for the 111 area. You guys remember that? 111 right there. We were gunning for this area. Now, look where that price went. I'm going to just try to zoom in so you can see. So we were gunning for this area here. Look at that specific candle close there. Just beneath it, no wick. This is the precision of price, Gert, all right? This is the precision of price. You're looking for a specific close above a specific area, and then this happens, all right? Now, with this being said, it not closing well above this area here, this gives us an indication, guys, that there's a possibility that that was just a retracement and then we push down again. That's a very big possibility. Everybody with me? We came to the conclusion yesterday that we're looking for a stronger dollar to close above the 111 right there, around 1111, all right, 0.864. If we get the daily body above there, we're looking for a higher dollar to go above. Now, what we can do here, please make a note of this if you are able and you'd like to, and you really, really genuinely following this dollar, all right? Let's create a level here. All right, and please write that down for me. You can. 1111.864. Now, what I want us to do here, because there's no 12-hour time frame here, all right, we then have to count three 4-hour candles. Is everybody with me here? So if we can get 3 4-hour candles at midday to close above here, that obviously gives us a different indication of what is happening. It's already 9:40. Can you guys see what is happening here? It's remaining at the downside here. So if we get, 3 candles or 2, because remember, it's 9:40 at 12, we're going to see what's happening here on the shorter time frames. There's no 12-hour here. Are we together? You got to subscribe to get certain features and so forth, but that's okay. That's fine. We can still measure it with the other time frames. Are we together, everybody? So if we get some movement up here, all right, that tells us that this entire area has been violated and we're seeing a stronger dollar. At this point in time, we are not on this level here. We are not on this level here. Does that make sense? So the assumptions are now open. So assumptions are now open. Does it make sense, everybody? People are going to say they still see a stronger dollar. People are going to say they see a weaker dollar. That is a prediction. What we're looking for is a little bit more certainty. Keywords, a little bit more certainty. How? We want to see some candle bodies close above there. If we don't see those candle bodies, above there, for us, we are still ranging here. Does that make sense? So this is shorter term movement. Is everybody clear here, guys? If the guys make any assumption and we're still in the same cycle, absolutely. So nothing changed here. Is everybody clear? Nothing changed here. So we don't change our stance. Remember, everybody, when it comes to my specific sessions, you remember, guys, me and Doc, we have different ways. Does it make sense? I can only speak for myself. Everybody clear? When it comes to my sessions here, guys, what's very important, we don't change our stance immediately. Does that make sense, everyone? We wait to see what is happening here. We are still at the 110. We need the 111864. All right, but fortunately, me and Doc, we are pro dollar together. We both still see stronger dollar. Yeah. So all right. So let's go now to our indices. All right, let's go to our indices and see what has happened yesterday. We drew some levels. Yesterday, and we want to see what's actually come from that. So here's the NASDAQ. Look at the NASI here. Remember the pivot points I spoke to you guys about. It's either we coming down or we bouncing from the pivot. Look at the pivot. We are up. Does it make sense? Big rejection there. Now, if the indices keep on going up, if the commodities keeps on going up, what does that tell us about the dollar index or the probability of the dollar? If we see the rise here, exactly, weaker dollar, weaker DXY. If gold keeps on ascending or moving up, are we together? We then are forecasting the probability of having a weaker dollar if they continue to go up. Remember, gold and the US, they are negatively correlating. So if gold goes up, dollar generally comes down. If dollar goes up, gold generally comes down. That's the general movement. Can it be obscured? Yes. Mr. W? Yes, it can. Everybody clear there, guys? All right, let me make sure. One in Ricky. Sometimes, Jay, sometimes, but not always. Gold in the US is more accurately correlated. Okay, so this indice here, this is the daily frame. Is everybody with me here? That's the daily frame. You can see we found support at the close on that pivot point there. If I switch to a 12-hour time frame here, Gert, look at this. Can you see it? So this support here is actually on the daily. Can you see that? It's actually here is the support. Is everybody 100 with what I just mentioned? I dealt with this yesterday. This area here, there, that is the close, that is the high. Support was found there. So if you drop to a short 12 or 8, look at this area here, we found support. Everybody clear? Now look at that pivot point there. Because we're dropping down, the pivots move. But it does not mean it's not the same, because now you're spreading the pivots into detail now. If you go to the daily, look at the daily there. Now you're going into an 8-hour time frame. It's just a shorter look, a shorter term look at what happened on the daily pivot. That's it. So if you go to the 12 or the 8, you can see that pivot point there. That's a support. Brilliant rejection. Now on a shorter time frame, that's a resistance. We broke out. Boom. Can you see that? That was a resistance here. Broke out. We broke out again. We're on cycle 2 now. Can you guys see that? Resist cycle 1, cycle 2. This is a shorter time frame look now. Don't forget that. This is hour time frames. This is not momentum. Even if you go to the hour, look at that. So resistance 1, 2. We are basically pivoting or resisting at that zone there. Is everybody clear? I'm pausing for 14 seconds here. 14 seconds. Let me make sure everybody's with me. We are literally here at this area. All right. Now, what's very important here, I want us to just look at our pivot points on the shorter time frames. There. We are not dealing with this area here. We're dealing with everything that's on top. There. And there. Now, price can go and land. If it closes beneath, can you see this yesterday? Yesterday's open. If it closes beneath yesterday's open, can you see where it can possibly go and land? Right there. We can still bounce from there. Does that make sense, everyone? We can bounce from there, and then we push up again. But if we break down from here, can you guys see how the next area then becomes here? Can you guys see that? Still 11. So now you're going down. So let me quickly put a level there so you can see it. So if we break 11,490, there's an example there. Can you see how we now come down further? Why? Because the next pivot points, there's one there and there's one there. We don't TP there. We would then TP here. Is everybody clear? Is everybody with me here? I like the word there, possible short. Possible short, because we can still bounce from here. We can still bounce from here. If the dollar weakens, all right, in this specific case, because it's correlating against this, all right, we could still bounce from here and push all the way up into cycle 3, which should then take us, all right. Can you see the zone here, guys? If we're talking pivot points, cycle 3 could be there. Can you see there? Right there. That would be cycle 3. Please make sure that you're with me there, guys. Please make sure. This is so important, everybody. This is where you can literally lose out on 358 pips. Are we together? Not always. That's in between. Gold, dollar index. Those guys are in between. It bounces up and down. Sometimes it's positive, sometimes it's negative. So I always call them the wild child or the wild children, or the the ones that are unpredictable. They're so volatile, they can go either way. So if you want to really look at if you can trust them, all right, look at your 2 first. So you start off with dollar, you start off with gold. All right, now you know these guys, they move like this, right? Then you go and then you analyze, what do the indices, who are they moving with? Are they moving with gold, or are they moving with the dollar? Do you see that? So you start at the bases, are those two there. The middle guys, they're going to move interchangeably. All right, that's the issue there. But if you know which one they're working with, it's easier to analyze. If you know which one they're working with, it's easier to analyze. All right. There we go, Anya. Absolutely. There we go. It's wild children right there. Not always, Louis. I've just mentioned it now too. Cheryl. Not always. It's interchangeable. You first got to start with the dollar. You got to start with gold. They move up and down. And guys, you've seen it plenty of times. All right. Go and locate what the indices are doing. Are they following the gold? Are they following the dollar? Into the trade, Ash, i.e., I would think after the 11,362. No, you wouldn't go for a long unless you're using a shorter time frame. It depends what time frame you're using, the average. It depends what time frame. If you're using this specific time frame, all right, the hour. Let me just explain to Alrich here. Let's just say we push down till there. All right, so here we push down, okay? So let's say as an example, you long it now. This price can come up, reject right there, and then come back down again. So if we switch to daily, like you're saying, we need to switch to daily, hold on. If you switch to daily and you want to enter on a daily frame, all right, you can enter at this specific zone here. You're just going to get in at a cheaper price, Alrich. Are we together? But if the daily frame closes beneath 11,490, you're in the wrong side. Now the momentum is still pushing down. Is everybody with me here? I'm going to say it again. If you enter, all right, at 11, let's use your specific level there, Al. If you enter at 11,362, but the daily closes beneath, the momentum is now beneath. Now you're in a deficit from there to there for about 132 pips. What if your stop loss is there? Do you see that? If your stop loss is there and the daily body closes beneath, remember, momentum is stronger than your hour, than your minutes. The momentum time frames will always be stronger in buying and selling. So if you're watching the momentum time frames, chances are you either, number one, entering on shorter time frames with the based on momentum, all right, or you only trading the momentum where you're not entering shorter time frames because your schedule is different. You might not have the time to trade. Maybe you are busy, so you cannot afford to sit at that PC there, you know, for hours, 2 hours, or 3 hours. You're just too busy. So you're not going to use minute frames. But the guy that is, he can use the momentum time frame, use that to place a trade on a shorter time frame. Because the key is here, where is the direction? That's the key. Does it make sense? That's the key question. Where's the overall direction? Okay. So if you place a trade at 11,362 and there's a rejection here, let's say it did not close, all right, beneath 11,362, then we can look at that specific long. 100%. I hear you. Do you see that? But then there's guys that don't want to take the risk at that bottom. They don't want to take the risk at that bottom. What they will do is this. Watch what they do, Al. They will take the Fibonacci as an example, and they will draw it from the high there. Can you see the high? They'll take it to the bottom right there, and they'll say, no, there's no ways I'm going to get involved in longing it at the 11,362. I'll wait for the 50% first. All right, so if I go to a shorter time frame, just to show you, where's the 50%? Can you see the 50 there? So they'll wait for price to move from there and retrace back above the 50 before they enter there, because that is a psychological level for the long. Because it's now gone back 50% of the way it came down. That is a lot. Does it make sense? Other guys will say, Ash, I'm sorry. That to me, 50 is like a flip of the coin, Mr. W. That 50 can, you know, it can be right there and come back down. All right, Ash, fine. I hear you. I'll rather go above the 60%, the zone I spoke to you about yesterday, and long it from there. That is a different psychological level. That is more than 50% of buyers that have pushed up. Does it make sense? But can I add something here? Because Alridge is asking an important question. Guys, everything I'm showing you is in detail. Why? So you can plan your trades better. Does it make sense? Let me give you more detail here now. All right? you're going to have that 60%. That's the first area. So now you tick it off, 60%. Can you see that, Mr. W? Guess what the rest of the guys do? That's what they do. They'll say, I'm taking a horizontal level and I'm placing it there, which is above that zone, above that high, and I'm going to put, look at this, a rectangle in there. And I'm telling you, I am only longing above 11,608. It is different psychological levels. People are not going to get in at the same entry price. Does that make sense? Some guys will feel more comfortable because it's above the 60 and above their previous high there. So that makes them feel, listen to the words, feel. Because at the end of the day, that is what people feel. Does it make sense, everyone? You get the technicals there and it helps you feel better about your entry. Does that make sense, everybody? I'm pausing for 14 seconds, guys. I think that was clear and detailed enough. Tell me I was wrong, please. I'll go back. Not a problem. Are we together? Let me know. Let me know. Let me know. Let me know. Okay, there we go. Yeah, beautiful. Beautiful. So everybody's okay with this. Everybody understands the indices here. Everybody is understanding the correlation that I spoke about. All right, it's going to differ from person to person. It's just what it is. Let's go over S&Ps correlating together. You're seeing that same thing happen there. We are currently at the resistance. It's the same as the NASDAQ, guys. If you go to the daily there, let me take off the fib. Let me take off the fib and I'm zooming in. Look at that specific area. Look at the S&P on the same daily. We're at the same resistance. All right. So the same concept is going to apply here. That's the nice thing about trading these three, is that the similarities are so much that you're applying the same concept. Does that make sense? The movements will be different. On the one, you might get less pips versus the other, but the concept of analysis is the same because they're at similar places. All right, that's the S&P. Look at the Dow Jones. If you go to the daily, same story there. Concept. Is everybody with me? But I strongly bet 100%. And you know what? There are some guys, Nyashe, that's going to say, sorry, Nyashe, I don't see it. I see the upside. That's the beauty of the trading room, is that there are different what? Views. All right. There's nothing wrong with different views. That's how you build a country. That's how you build a country. Are we together? I don't think a democracy would have come into play if there wasn't different views of how to do things. All right. I don't think schools would exist if there wasn't different views, because policies get shaped by different opinions. Is everybody with me? Is everybody with me there, guys? Oh, thanks, Cheryl. All right. So it's so important to understand that. And guys, if I could just mention this, whilst I go to Brent, the reason why we have different ways to trade support and resistance, trend lines, is because different people saw this from different. Is everybody with me? Because there were different angles seen, people know how to do this thing differently. All right. All right. Here we have Brent. Now, Brent, ladies and gentlemen, you can see that we've put our area in place. We had our pivot point, or at least hold on. We used the weekly and we used the monthly. It was more the weekly actually. And we can see that it has obviously stayed, even from a daily perspective. We've crossed the finish line here, and we were still in the seller zone. Now, what's critical about this specific area is that you can clearly see this here is a very strong resistance. Now, guys, I want you to be careful with this at this moment in time. All right, I want you to be so careful here, because price is currently in the sell zone here. Yes, it's in the sell zone. That's a resistance here. Is everybody clear? All right. Now, what price can do from a shorter term perspective, we can push till there and then we come down. Is everybody clear? We can. So if you look at this, how many pips would that be? My word. Come on, 17 pips. That's nothing. Does it make sense, everybody? It's 17 pips. Price can push up from there to there, resist, and then come back down again. Look at all of the noise here. We've not retraced yet. Now, you guys know how we deal with what? These retracements. It's been going up. Look at the days there. How many days after there? 1, 2, 3. Here's the 4th day here. Does it make sense, everybody? So that's a resistance. We can go up, touch it, and come back down again. What we need to put in place here is the southern, I already have it, sorry, 92. The southern hemisphere, are we together? And the northern hemisphere. Ash, please remind me, what are those? What are those? Southern meaning, this is the southern. Ah, no, sorry, wrong one. Sorry. Here we go. That's the southern hemisphere. All right. And this here is the above there. So I'm not going to make it green. I'm making it blue because you might not see it, but that is the northern hemisphere. So what price can do is this. Price can do that and come back down and start doing this. It's very possible. Is everybody with me here? Might not go up completely and then come down. No. You can see this is a sideways movement here on this side here. Can you see it? So always look at the pattern from before. Was it straight up? Was it moving systematically for you to have a higher probability of how it could play out on this side here? Is everybody clear there, guys? So if it does go up, we could move sideways, but sideways down, and then push up. Is everybody clear with that, guys? Let me make sure. This is important stuff. We are battling between these. This is a very, very critical part here. This is a big battle. It's in the center at the support and resistance, because it was a resistance, it's now a support. Guys, we are battling in the center here at this point in time. Can I please make this note, or ask you to make a note? This is where a lot of wicks can occur when there's battles. Is everybody with me here? In this zone here, you can expect some rejection because of the battle that is taking place. Is everybody clear? Remember, what's important is that we went over the finish line in the seller zone. All right, right there, and money to be lost. Absolutely, absolutely. Believe here, right over here, there are stop losses here. There are stop losses there. Are we together, everybody? How do you know there are stop losses there, Ash? Every breakout, guys, when guys are selling there, they normally look for a zone on top here to put their stop loss. They're not going to put it up there. So they'll put a stop loss right there. So if price has to retrace up, look how far it is from there. And let's look at how many pips there was. 14 pips. Only 14 pips. That's nothing for a quick wick. Does that make sense? So guys will normally find a tight stop loss at the breakout zone. That's why trading breakouts is also very, very dangerous at times. Is everybody clear? Because where you put your stop loss is important. That's why I mentioned to you guys the emergency exits. Emergency exits work better than stop losses at breakout points. Because at least with an emergency exit, you have a 24-hour window there to monitor that zone. Is everybody clear? Because in 24 hours, that price can reject at the breakout, retrace, reject, and come back down again. So it's good to see where the daily candle closes. Is everybody clear? Can I just make an example here? Can you guys see this area here? Look at this. So let's say you went for the short here. Let me just get my tools here. Guys, I love detailing this thing down. So you see, there's my entry at that area there. Can you guys see that? Here's the entry, right? Now you put an emergency exit in place there as an example. Can you see it? 95.32 now. Do you see that? Now, there's guys that will put a stop loss there. Chuck, they'll put a stop loss there, right? And look what price did. So they enter there as the sell, price goes up, hits the stop loss, and then comes back down. Do you see the frustration there? Is everybody clear? But the emergency exit, all right, after 24 hours, look what happened. It came back down again. So you would have still been in this specific trade. That's the point that I'm trying to make there. Can you guys see that? I'll say it one more time. Enter, price goes up. If your stop loss was there, knocks it, comes back down. Difference with the emergency exit, 24-hour window proved that this area here was not strong enough for price to go back up again. So that window shows you price and the power of the price. Is everybody clear with that, guys? Mr. W, Ma Dyson. Ken, Rico Fela, ne? Everyone. Is everybody clear there? No, Sia, they are not. It gives you time to make a decision. All right? How many times have you encountered a moment where you can't make a decision? Does it make sense? Because you put that SL in place and there's nothing wrong with the stop loss. Are we together? There's nothing wrong with that. It's good. If you're trading shorter time frames, increase your technique to keep you in the game. Can I say that again? Hey, I wish that, that could have been a quote there or something, When you're trading shorter time frames, all right, create and look for techniques that keeps you in the game. Does that make sense, everybody? Is there a risk involved? There's a risk in everything. If you step out and you get into your car right now, how do you know your engine? God forbid that doesn't happen. Does it make sense? Is everybody with me? Or there's a stray bullet somewhere. Everything has a risk. You just got to calculate it. You got to calculate the risk. WTI. WTI. Same story here. But at midnight, all right, Sia, at midnight, all right, and this is for the guys that don't mind waking up. Are we together? If you don't want to wake up at midnight, I don't think the emergency exits are going to work for you. All right? But if you don't mind to set your alarm or you're awake still that time, cool. Is there anyone that's still awake at midnight, though, without alarms? Let me just ask the question. Who's awake? Mr. W, midnight, just you. Who else? Who is awake? Zeph? Jay, sometimes midnight? Some nights, guys, the crossover is so important. Listen to me today. That crossover from one day to another. Hear me today. That's a very important moment there. I'm not saying you must be awake now. No, you can sleep at 9 and set it for midnight. Wake up with your alarm. Get up. Look at your charts. Go back to sleep. But as long as you made the decision, at least there was a decision made. Is everybody clear? The Atlas says midnight. I would be. Oh, Sia, you'll be surprised. For a very long time, that's what I did. I set my alarm for midnight. That was like for 3-4 years. I set my alarm for midnight to wake up to see what happens because I slept at 9. Sleep is good for you. Are we together? Slept at 9 and I set my alarm quickly. Are we together? I don't mind quickly waking up. Won't even take me 10 minutes. Quickly wake up. Some nice water as well. Check my charts. Back to bed again once I've made a decision. Guys, like I say, different strokes for different folks. Mr. W. All right. WTI, same story here. Same story here. We at the resistance. It can do the same thing. If you place that zone there, we can hit that area 90 and then we can come back down. And there has been no retracement back to the pivot point there. Please understand that, guys. There's been no retracement back to the pivot point there. Can you write this down? Pivot points are retraced. Or there's a pullback to the pivot point when it's been broken there. You monitor it, Angel. You put it's two risk tools, a stop loss and an emergency exit. It's two risk tools you put in place to manage your money. All right, it's two of them, not just one, two. You use both of them. Try to increase the probability of managing your portfolio more effectively. All right, everybody clear? Now, guys, what's important about this, we're pushing up. Can you see this pivot point here? I did this with you yesterday. Look at that. See that zone there? Cheryl, look at that there. If I take my crosshair, look at that zone right there. We pushed up from that zone. Can you see that? Has there been any retracement back to that zone there? Yes or no? There hasn't. Philip, was there any pullback at this point in time? SIA control, and then you have to hold on it. So you click and you click, you hold control, and then you click on the rectangle. All right. So can you see this zone here? We pushed up from there. We have not retraced back. Are we together? So let me quickly sum this up. We can retrace back to the close, or we can retrace back to the open. The open from the close is 33 pips. Guys, Brent has a different movement to that of indices. Are we together, everybody? Is everybody with me there? Different movement to that of indices. Indices are gunning over 300 pips. Is everybody clear? Is everybody clear? All right. Let's go do some work on some Forex. But before we do that, hold on. Let's go to gold. Let's finish off with gold. Let's check the dollar. Let's look at the dollar. That's what we're doing with the dollar now. Gert, can you see that? Chuck, can you see that? We are right here. We've not moved much. So let's go see what gold is doing. Same story. Same story. Do you see that? Dollar not moving much, gold not moving much. Now, guys, can I quickly just show you something that's so detailed? Look at the candle with gold, right? Can you guys see this? Can you see the candle with gold, right? Look at the candle with the US. Can you guys see the inverse, guys? Look at the candle. It's bearish. Can you guys see that? But then you go to gold. Bullish. Everybody clear there, guys? So we need 1729. By the way, yesterday, aren't you guys happy? We actually pushed very nicely yesterday with gold. Remember that? Look at this. This was yesterday. Look at this, guys. We said if we push beneath the zone here, which was there. Cheryl, look at this. You see this here, guys? Is there anyone that can agree here with the point, guys? I mean, the accuracy is insane. Look how it respected that area there. Oh my word. Guys, if this does not excite you, I don't know. You can create an entire strategy just around that. If you sit down and you look at this thing. Does it make sense, everybody? It is absolutely mind-blowing to see how price can respect that specific pivot point there. Not this, no, there. There's nothing there. Here. And if you look at the candle, look at the resistance here, look at the other candles there. Respecting the same areas. Everybody clear there, guys? It's absolutely astounding. Absolutely. It's beautiful. Yes. Look at this. Right there. Look at the respect. Look at the respect. All right. Ash, what are you into, guys? I want to give you guys a holistic view here, Cheryl, Chuck, so you can build your own approach. Is everybody clear? Is everybody clear? The next wave is not telling people strategy. Guys, please hear me today. The next wave of retail trading, hear me today, is showing people how to build their own strategy. I'm not talking about automation. Automation helps you input your strategy so that you don't have to go draw lines. Does that make sense? Can I say that again? Automation, coding your strategy, means that you don't need to go and draw these lines like you see me drawing here, because you've coded it to do it automatically. Does that make sense, everybody? So all you do is you switch on your specific indicator and boom, there it is. But the next training that's coming, you see the wave. We're already ahead. Cheryl, we're already ahead. Do you understand the market so well you can give someone the picture and say, here, go and build your own business now? Because that's what network marketing is, isn't it? So everybody, everyone is running away from becoming my affiliate to building your own. Hear me today. Is everybody with me? So people are running away from buying a strategy. No, let me create my own. Let me create my own business. That's the way. Is everybody clear there, guys? Hey, I wanted to be a bit more, I wanted to use such a radical example, but I'm going to leave it alone. I'm going to leave it alone. So gold at this point in time, you can see there is a swap between the dollar index and gold. Brent is in between, the indices are in between. All right. Now, guys, can I please just mention the Cheryl, Louis, and there was someone else. Hi, Teresa. There was someone else that asked, you know, about gold and the dollar index. And what did I say? I say, guys, we look at the gold, we look at the dollar, and you look how they are correlating, right? So, and then you look at those guys in between to locate whether they will either be bearish or bullish. You guys remember that? I said that in the beginning, right? So gold at this point looks more bullish. Dollar index looks more bearish. Does it make sense? Gold bullish, dollar index bearish. So let's go to the indices and see, because now I'm showing it to you. I'm not just saying it to you. Which one is this correlating with, guys? If you look at it like this, NASDAQ, is it correlating more with the gold or with the dollar index? Exactly. Dollar index. Dollar index. Do you see that? So automatically, if this continues, do you see why this area is so important here? 11,490. Because 11,490 could be a short to there, 130 pips. Do you see why it's so important to see the difference? So from there to there is 130 pips. If the dollar continues to weaken, it's correlating there. So if you go to S&P 500, it's also correlating with the dollar. Do you guys see the difference? If you go to Dow Jones, there we go. Now, guys, can I say this to you? Guys, when I was in my second year, I got frustrated because the guys were talking about, no, listen, I'm gonna buy this, I'm gonna sell that. And then I would ask them, but how do you know? Then I'll say, no, because there's correlation. So I'm like, okay, explain correlation. No, when this one goes up, that one goes down. Okay, so but how do you know where to enter? It frustrated the daylights out of me because I'm like, yeah, I'm trying to get this thing, but what are you guys seeing that I'm not seeing? Does it make sense? And so I vowed and I said, listen, if it comes to that, let me detail it down for the rest of the guys so that you can practically go and apply. Because you know what, to be honest with you guys, not everybody is good at explaining stuff. Can we be human to human here? Not everybody is good at expressing detail. Is everybody clear? Some guys will just say, no, that that if the dollar goes up, gold goes down, and then you're going to enter there. But they don't give you detail, the steps. All right. So Brent here, who is Brent correlating with? Who is Brent correlating with here? All right. Dis hoekom ek jou gister gevra het, daar sê. Absolutely, Mr. W. Absolutely. Jay, that's a very important point. Guys, I think you guys can agree with Jay there. One might be an expert in the field, but can't explain it. You can do it, you can produce, but explaining is, hey, yeah. All right. Yeah, no, I've seen that. Explaining frustrates, I'll tell you guys a story another day about how I needed to get my matric certificate to enroll for a program, and the explanation with the steps. All right. Just it's a different story, right? So this one here is correlating here with gold. Are we together? Is everybody with me here? Share. Hold on. You're getting somewhere, Angel. That's beautiful. Today, Cheryl, are you learning it today? No, that's cool. Thumbs for you. Thanks, Shiv. There we go. When you explain something to someone and they understand, okay, I see you. All right. Is everybody with me here? Is everybody with me? So that is gold. WTI is gold. There we go. So now we know who and what is in the zoo and who's correlating and what we need to look for. Does it make sense? Now we know. So who are the two front runners here? Before I go to those dollar pairs, who are the guys that's creating all of this at this moment in time? Who's creating this? Because when you have a bunch of kids and there's chaos, you got to find the source. It's the dollar and gold. Guys, let's give Anya a round of applause, man. Let's give Anya a round of applause. It's those two suckers that are creating this thing. Puts work out there for us, but we got to do it. Right, Chuck? USD Swiss franc. Now look at the problem here. Guys, yesterday, big rejection there. Boom. Rejection here. We're ranging. If I go to the hour frame and I zoom out, what's changed here? There's nothing changed here. That was yesterday's support. And look at that pivot point there. Can you guys see? Look at that right there. We're rejecting again. We're revisiting yesterday's open, rejecting once again. Is everybody clear there? Now, guess what? If the dollar weakens and we close beneath the zone here, do you see why 9.7 is going to be so important here? 9.7. Can you guys see that? 9.7 becomes very important because we've closed beneath the zone here. Look, there's a rejection there. Do you see that? From there to there is 45 pips. That means something to someone. Is everybody clear? Like Omo means something to someone. Surf, Ariel, sunlight. Does it make sense, everybody? Different pip distances mean something to someone. Cheryl might only appreciate 100 pips. Uncle Philip might like 60 pips. Chuck might want 15 pips. 1.5, Chuck. I'm putting in the 15 there because Chuck's putting in 100 standard lots. So 15 pips is all right for him. And it goes back to saying whether you are scalping, whether you are, your minute frames, or whether you are doing your daily frames, what I'm showing you guys is the ability to create your own approach according to your schedule. All right, everybody. So here we have a rejection. We're not touching it. If we go to USD CAD, we got the PMI, the construction coming out today. All right, let's watch it. What's going to be important here with this guy? Can you see the zone here? There. Can you guys see this? Right there. So that's 2 days ago, not yesterday. day before, yesterday's open. Sorry, 2 days ago's open. Do you guys see that? And there you have another open there. So from this zone to that area there is only 41 pips. This is for the short-term guy. Is everybody clear? They're trading the detail here. Remember, if you zoom out, they're trading the detail. Gert, does that make sense there, right? They're just trading the detail. But the guy that's doing a weekly is not interested in that small movement. Look at that little movement there. Hold on. Let me show you. The guy that's trading is not interested in that. Does that make sense? That's 41 pips. He wants, or the guy that is trading higher time frames, they're waiting for price to push up all the way. Can you see that? That's what the momentum guys are waiting for. They don't care about that small little guy there. That's for the guys that want to go in and out quickly. That's the hour time frames. That's what they're going to catch right there. I've zoomed into it now. That's what they're going to catch. But the guy on the weekly, the monthly, they don't care about it. So once again, I repeat, this approach, what I'm showing you guys, is the ability to get you to create your own. I'm going to say it till you turn blue. It's all good. Is everybody with me? Until you turn blue and green. I'm okay with that. Does it make sense? I want you to Mr. W, when you eventually go to bed at midnight, you know, to hear my words, guys. I remind you. You just hear my voice, guys. I remind you. Are we together? Are we together, guys? AUD USD from a daily perspective, we didn't move much. We didn't move much here. Does it make sense? Nothing. Look at that. Yesterday. Can someone tell me, where are we rejecting? Where are we rejecting, guys? The other day, I had a dream. Mr. W, I had a dream. I put in 2 trades of 0.50, you know, these dreams are random. I put in two trades of 0.50 there, you know, sometimes it's a lot, 10 lots, maybe 0.0, it depends, you know. And that specific trade at 2 trades of 0.50, I think I was trading the GBP CAD, I believe, GBP CHF, one of those two. And I'm telling you, that thing rushed to 18 grand, just like this, you know, in an instant, you know. And I woke up, I'm like, hey, where's my chart, you know? That's funny. Man, that's funny. Guys, where are we tracking it? This is the candle that's keeping this price behind. Can you guys see this? Price is being kept in this area here. Right there, look at this. Let me pause for 14 seconds. This area is keeping 3 days in. 3 days. I mean, guys, this is insane. It's keeping it in that range. So which tells us that if we break this area here, it tells us about the momentum of price now, that we're ready to move. Does it make sense, everybody? It tells us about the momentum, we're ready to move. Now what we need to do is, can you see there's nothing here? So let's just go higher. Let's just go a little bit higher. Let's go see if there is an area. Oh, that's too far. That's too far. That's 71 and 64. We're not going to trade it till there. But let's zoom out. Go to the left-hand side. Ash, why are you going to the left-hand side? Because you can see where the other pivot points are. Do you see anything? No. There we go. So let's zoom in. So if I take, as an example, let me just take some of this off here, guys. Hold on. Let me take this off. This is just analysis. This is showing. So if we take it from 6469, not bad at all. Does that make sense, everybody? We look exactly. Anya, looking for price behavior. Look at that zone. We're using the low, not the body. If we use the body, it's now going to 70. If we use that area, that's 71. If we use the high, that's 72. It's too far away if you are trading shorter time frames. So that's not relevant for you. You want to use the most recent area, 69. So let's see, if I go back, is there a lower level than 69? Is there a lower level than 69? Nothing so far. Nothing so far. We're still at 69. We're still at 69. There it is. I'm moving back. I'm moving back. There's a zone here, but price is already there. 64. Aha. Can you see the zone here, guys? There's a resistance there, but we do not want to touch the resistance. If there's a price that's maybe around there, we can take it. Because price might not go all the way till there. So we just want to double check. We just want to double check. 69. There's a more recent price. Can you see it? There's a more recent price right there. 68. You can even bring it down now. All right. 67. Is everybody with me? 67. That's 2 ranges away. So let's go back. Watch. I'm going back to the front of the chart. So from there to there is 200 pips. Is that doable? Is that doable? Here's the daily, the same daily. If we break from there to there, and look, it matches up here. Can I please, Mr. W, Chuck? It matches up. Look at our TP that we found all the way back there. Matches up, 67. Is everybody clear? All right. So now let's do this. Because from there to there is about 200 pips, right? Let's cut the sucker in half for the guys that are minute trading. Let's cut it in half for the guys that are minute trading. Who trades minutes here? Who trades minutes here? Nobody. Angel, Jabula, all right? So if you go to a 30-minute, look at that. From there to the zone, 84 pips. Are you with me, guys? That's a 30-minute chart. I go to a 15-minute. Look at the accuracy there. Is everybody with me here? Look at this. Breaks up. TP right there. Everybody clear? Guys, I'm loving the session because this is all to do with the range. This is a range here. This is a range. Let me show you. This is the range. No, sorry. This here is a range. That's a range. Does it make sense? This range is valid for the guy that's trading 15 minutes. Is everybody clear? That's for the guy 15 minutes. He's going to get out 84 pips, right? But if I go daily, now the range is enlarged. That's for the momentum guy. Do you see the difference there? So you got to cut out these pieces for yourself. So this is not about you using a 15-minute indicator or no. This is about learning how to create ranges, whether you're trading minutes, whether you're trading hours, whether you're trading days or weeks. Does it make sense, everybody? Now, once you understand the principle of what I've mentioned, how to create these specific ranges, right? Listen to me very careful. Now you can develop your approach. Can I go deeper there? Can I go deeper there? Because now I'm showing you whether you're trading minutes, whether you're trading hours, whether you're trading days or weeks, whatever, you get your range. Can I go deeper there with what I just mentioned? Now it's up to you to say, okay, I'm a minute trader. My approach is going to be different from the guy with the hour. Is everybody with me? So now look at this. Your approach as a minute trader, you might say, okay, I can see 0.65471 is an area that I want to enter. To go where? To go to the zone here. That's 84 pips away. Can you guys see that? How I enter here, I have to have my own tick list. Is everybody with me? So the tick list might include the following. From there, can you guys see that? You take your trend line as an example. Let me just do this. Hold on. Let me go back to let's say you're trading a 30-minute chart. Let's say you're trading a 30-minute chart. So now maybe you using a trend line is your specific approach. You say, all right, Ash, I've identified my range now. Now I'm going to follow a series of steps to give you my entry. The first thing I look at is if the trend line is broken. All right, everybody. So there's the trend line. So here price goes up and it breaks the trend line. But here you say to yourself, no, that's not enough for my approach. I need the trend line to be broken and I need the support, the resistance to be broken as well. Now you have two things you're looking at before you enter into the market to go long. Is everybody with me here? I'm going to say it again, but I'm going to number it now. Is this good or what, guys? Come on. Is this good or what? There's number one. That's the first thing I'm looking at. Trend line. I want it to be broken. The second thing I'm looking for, all right, I'm looking for the resistance to be broken. That's the second thing. Can you see that? Now the guys say, all right, insert, I'm going to use an indicator. So here's a moving average as an example now, right? Let me use a 15 or a 30, because I'm using a 30-minute chart as an example there now. All right, look at that specific area here. I need price to break above the moving average here. So this becomes number 3 as an example. There's number 3. Can you guys see this? There's number 3. Now, let's go to a last one here. Ash, I'm waiting for a 15-minute candle. Even although I did my analysis on a 30-minute. Listen to this. Even although I did analysis on a 30-minute, I'm waiting for, hold on. Guys, got this thing covered, man. We're teaching how to build strategies here. This is not, now you put in place 15-minute candle close. So that's 1, 2, 3, 4 things you're waiting for before you enter to go long. Is everybody clear? All right. Now, if you like what I mentioned to you about shaving the wicks, if you love shaving the wicks, let's look for wicks. Let's look for wicks. So we're going back. No wicks, nothing. 5, 4. There we go. Look at that. 3, nothing. 2, nothing. 1, nothing. Do you guys see that? Because you are entering on a minute frame. The wicks is important to shave there. Is everybody clear? Is the line chart? Yes. Because you're looking for the closing of price. You're looking, that's the last closing of price here at that resistance. So now you know when you move forward and you go back to the 30, that's 5495. You've moved up a bit, but it's a more accurate entry now because you've shaved the wicks. You have decreased the probability of price rejecting on you. Can I say that again? That sounds really good. You've decreased the probability of price rejecting on you just because of a 1-minute rejection on the end there. Is everybody clear? So this is key. So there we have 5 things we've used. Shave the wicks, trend line, resistance, moving average, 15-minute candle. Now look at, it was 84. It's now 82. So your pips decrease, yes, but the chances of this making more sense in that trade is there. Everybody cool? Everybody got it? Let me give the guys a bit of chance there just to respond there. All right, then we're going to push on. And remember, this one's the guys that are doing shorter time frames. All right. Sure, EJ, 3 steps was trend line, resistance, moving average. It's going to differ. Remember, this was just random. Some guys will use a RSI. Others will use a Bollinger Band. This is random that I just used. So everyone's steps at this point will be different, provided you understand the principle on how to do what? To draw your ranges. Guys, when you know how to draw ranges, it's easier to create that strategy, that approach to the market. Does that make sense, everybody? That's why I put so much focus on the price action. I put so much emphasis on pivot points. I put so much emphasis on the trend, on the cycles, because the price action, once you get that, the approach is easier to put in place. All right? NZD on a 30-minute chart is going to look the same, guys. It's going to look the same. This couple of differences, but I mean, you know, when I say couple, I'm talking about the price. All right? It cuts out the wicks, yes. So remember, it cuts out the wicks, but you want a candle body anyway. You don't care about the wick, you care about the body. So as long as you get a body above there, you're cool. If it was a wick above there, different story. All right. I remember when I was new, I'm waiting for the ... We're waiting. All right, NZD USD, for now, it's rejected at that same place. This will have the same effect, the same thing. You cut out your range. All right, GBP USD, there was a short there. We did push down very nicely around 11 a.m. We moved about 132 pips. Did a bit of a comeback. A bit of a comeback. I just want to see, what are we missing? Are we missing something here? Hold on. Not on that one. Hold on, hold on. It's not that candle. See the zone here, 11.14 there. Sorry, 1.14 or 11.14. 1.14 there. That's where the rejection occurred. Everybody clear? And then you can see this is a very strong zone as well. That's a very strong zone right there. All right. PMI was released, pound plus. So then we should have seen an opposite effect here. Do you see, guys? It's so crazy when you see a positive result, right, Cheryl? And it doesn't add up on the technicals. Do you see that? So that's why when you only use fundamentals and you don't apply yourself to technicals, it's a challenge. Do you see that? All right. You're welcome there, Charmaine. It's an absolute pleasure. Absolute pleasure. All right. So guys, we got to balance the fundamentals. As Roger will say, the fundies. Balance the fundies. All right. And the technicals. Is everybody clear? Balance them out. So at this point, the pound is supposed to be doing better. Is that clear? But we know that there is opposition with the dollar as well. Interest rates, NFP, those fundamentals, it's bringing that consistent fight there. Does that make sense? So even if it's positive, it does not mean we're going to get that specific result. It doesn't mean that. Does that make sense, everybody? If there was no dollar releases, there was no NFP, there was no interest rates, etc., and so forth, it might have had a totally different result there. Does it make sense? But because there's balancing opposition on the end, it makes a difference on the technicals. All right. FX, I can guarantee you today, the more you read, the more you do sharpen your skills on the technicals, the more you attend and you repeat, you're going to get better. Are we together? That's in an overarching statement. The detail is in the work. The detail is in the consistency. The detail is in the effort. Are we together? Everybody with me there, guys? All right, let's give the guys a round of applause. Applause that made some profits yesterday there. Let's give them a round of applause, guys. All right, let's go to Euro USD. Euro USD, then we're going to go to USD JPY. Same story here. Looks very similar to the GBP USD. At this point, we are at the support of that area there, the open. We're at the support here. Can we bounce from here? Absolutely. Absolutely. All right, everybody with me there? From there to that area there, 44 pips. Right there. All right. Nicely done, guys. Nicely done. Everybody. So this one we wait and monitor right there. All right, let's go to USD JPY. USD JPY. Well, look how strong that area is there. Yes, look at this. Gert, look at this. Just that alone. Never mind that zone there, Chuck. Never mind this. Look at that resistance, 144, and both days closed exactly beneath it. That's the words right there, Anya. That's the words right there. Look at that. It closed right beneath there. That is insane. All right. I'll probably be running on tables here, you know, if I saw you face to face. I'll be running on the table and saying, guys, look at this thing. If I was with you face to face, I'm telling you. All right. 144.705 right beneath. So we need the zone here to be broken. We need that resistance to be broken. It is holding right there. From a weekly perspective, ladies and gentlemen, there's a lot of rejection here, and the weekly rejection is seen at this zone. All right. Everybody clear? Still see some upside here. We could see, guys, USD JPY is also a very good pair to look for when you're looking at NFP, right? Euro USD, USD JPY. Please make a note of that. USD JPY, Euro USD, USD Swiss franc. Are we together? Even the USD CAD, those four. I'll say it again. Euro USD, USD Swiss franc, USD JPY, USD CAD. When NFP is released, all right, they normally have more responses. If the AUD USD responds, the NZD will follow the AUD and vice versa. If the NZD responds, the AUD will respond with the NZD. They normally correlate together well. All right. Yeah, look, it's like the fundies now, right, Chuck? Pound's supposed to be getting stronger, but the opposite's happening here. All right. Everybody cool? Yes, there we go, Anya. And also with that, remember, guys, the gold, that's just Forex. Commodities, put gold in there, Anya, for the guys, right? Put gold in there. Because those pairs, and then obviously gold, because the dollar then correlates there. Okay. There we go. Everybody clear? Quick recap here, guys. Quick recap here. these ranges that I spoke to you about. These ranges that I spoke to you about. If you are trading shorter time frames, your ranges can look like this. Everybody clear there, guys? When you are trading shorter time frames, your ranges can look like this. When you are trading higher time frames, your ranges can look like that. Is everybody clear there? So what you can do if you're trading higher time frames, okay, this won't be the middle, but I'll try and, you know. So roughly around there, cut it in half. Sorry. Cut it in half. And what you can do is you can trade it up, but to the zone, because remember, there's that zone that I referred to that you can use the FIB for. Remember that. So now you can trade it to that zone there. You wait for it. Are we together? The 38 and the 61, yes. So you get out there. Price can then push up again. All right, beautiful. Now you wait for it to respond at the 50. Will it push down from there? You're not sure. Remember, you already got your money. Now you're waiting. If it responds there, comes back down, you out. Are we together? Then you wait for price to push again. If it goes up the 50, the moment you get the daily above there or higher hour time frame, there's another entry up. Are we together, everybody? Preferably the 12, because if you do an hour or you do a 15-minute, then this would be your take profit, that the other zone to there, because that's a shorter time from now. That's 5 minutes. All right, that's 6 minutes. Are we together, everybody? To take it from there to there. But if you're looking to take it, all right, to that zone up there, then obviously you got to wait for price to move above that area, and then you long it up if you're trading a higher time frame. This is obviously different here on this side. This is just from there to there. It's shorter distances, 30 pips, 40 pips, 60 pips. Everybody clear there? Let me make sure everybody's 100%. You in and out, yes. And remember, this area, this here, is risky. Is everybody clear? That is more risky. I don't know if you guys can see that. It's riskier. Amal met me. Whenever you are trading shorter time frames, it is riskier. If you haven't written this down, please write this down. The higher the time frame, the stronger the signal for the buy or sell. The higher the time frame, the stronger the signal for the buy or sell. The shorter the time frame, it's just the opposite. The risk will be higher. Why? There are spikes on the lower time frames that can kick you out of a stop loss. You have a tighter stop. If you really want a 1-to-2 ratio on a shorter time frame movement, your stop is going to be tighter, and you run the risk of getting kicked out. But if you are doing this here on this side here, your stop losses can be at the bottom versus inside of the movement. Are we together, everybody? Everybody clear? Guys, I think this was a fantastic session. Honestly, I think it was fantastic. All right, you can do revision here. Go to YouTube, search for Quick Trade, go and check it out. Is everybody good? Jay, remember, it depends how long you're holding. It depends how long you're holding, all right? 1 to 3, 1 to 4, it depends where that specific pivot point is. The pivot point could be at a place where it makes it a 1 to 3 ratio. It depends on the exchange rate. It depends how long you hold. And if you cut it in half, it also affects that specific ratio, all right? If you cut it in half and then you get out and you get in again, that will also influence it, all right? So these are key things. Guys, let me say it again, YouTube, search Quick Trade, all right? So you go into YouTube, search Quick Trade, click on videos, you'll find the stream session, do some revision. If there's notes that you obviously did not see or you didn't get, check the revision, write them down, get your book sorted, all right? I'll obviously be with you guys again at 4 p.m. to do a recap. We are waiting the NFP. We want to see what's happening there. Everybody clear? Duidelik? Almal is duidelik, that's it. Ken, Oleseni, Zeph, Angel, Fani, Petro, Henny, everybody. See you, Chuck. All the guys on YouTube that joined us, thank you very much. Radishaba, you can lock it by using a trailing stop. I'll see if I can put in the trailing stop maybe at 4 p.m. Show you guys that, how to access that and how to put it in, all right? Everybody clear? I'll see you guys later at 4 p.m., all right? 4 p.m.